Okay, let's just jump right in. What if Bitcoin, the most talked about digital currency on the planet, wasn't just something you dabbled with on an app? What if it became a core part of a nation's financial security, like sitting right alongside gold in the official treasury? I know, it sounds a little bit like science fiction, but believe me, this idea is way closer to reality than you might think. And that's the exact shift we're going to unpack here. This whole idea of Bitcoin graduating from a speculative digital asset to a strategic national reserve, it's not a fringe theory anymore. It has officially entered the halls of power. And a move like this, wow, it could literally reshape our very definition of what national wealth even means. All right, so first things first, we got to understand the core concept here. I mean, how can a digital asset, something that exists only as code, even be compared to the actual gold bars locked away in Fort Knox? Let's get into it. Well, the whole case for Bitcoin as a national treasure really starts by putting it side by side with the OG reserve asset, gold. I mean, for centuries, gold worked for a simple reason. It's scarce and it's durable. Now, the people who are big on Bitcoin argue it has those exact same qualities, just, built for the digital age. So instead of physical scarcity, you've got mathematical scarcity, a hard cap of 21 million coins. That's it. There will never be more. They don't call it digital gold for nothing, right? And this whole idea is what's known as a strategic reserve. The easiest way to think about it is like a nation's emergency fund. It's designed to protect the country against, well, pretty much everything, from major economic shocks to a full-blown currency collapse. Historically, that fund was filled with things like gold or oil. So the really radical question we're facing now is, does Bitcoin belong on that list? What's really interesting here is that this whole idea, it didn't come from some government think tank. Nope. It actually started in a corporate boardroom. It was one company that made this absolutely massive, precedent-setting bet that, in a way, ended up providing a blueprint for Washington. So, take a look at this number, $47.33 billion. Now, that is not the market cap of some hot new tech giant. According to the timeline from our sources, that's the projected value of the Bitcoin that will be held by a single publicly traded company by late 2025. Just one company. And that company is Strategy Incorporated. You probably knew them as MicroStrategy. They've basically become the world's largest corporate holder of Bitcoin, scooping up almost 640,000 coins. And their reasoning is actually pretty simple and really bold. They see it as a powerful hedge against currency devaluation. So, in essence, they started running their company's treasury almost exactly like a country would run its national treasury. And this is the guy behind the whole plan, Michael Saylor. His argument is crystal clear. He's basically saying, hey, we live in an increasingly digital world, so we need a digital reserve asset. For him, Bitcoin isn't just an investment. He sees it as foundational property for this new 21st century economy. Okay, and this is where the story takes a major pivot. That corporate strategy, it leaped from the boardroom right onto the national stage. Washington definitely took notice, and what started as one company's big bet is now on the path to becoming official U.S. policy. And listen, this isn't just a bunch of talk. In March 2025, an executive order was actually signed to formally establish a strategic Bitcoin reserve. And what that did was halt the sale of any Bitcoin seized by the government. Fast forward to July, and that reserve was already worth a cool $24 billion. Then, by September, lawmakers were already meeting to push for even more ambitious legislation. Yeah, that legislation is called the Bitcoin Act, and its goals are, well, they're massive. We're talking about instructing the Treasury to acquire up to 1 million Bitcoin over 5 years, all while using budget-neutral strategies. But here's the real kicker, the most telling detail. The plan mandates that these assets be held in secure cold storage for 20 years. 20! So this isn't about short-term trading. This is a move to create a permanent national treasure. But of course, a move this big doesn't happen without a major debate. So what's the deal? Is this a genius hedge against economic instability, or is it just incredibly dangerous hype? All right, let's look at the bull case. The proponents are making an incredibly bold claim. A financial services firm, Van Eck, put out a projection saying that a U.S. Bitcoin reserve could do way more than just sit in a vault. It could actively reduce the national debt by as much as 18% over the next 20 years. So how did they get to that number? Well, the math behind their projection is pretty straightforward. VanEck's model basically assumes that Bitcoin's value will grow at roughly 25% every year, which, would far outpace the federal debt's 5% growth rate. To put it really simply, the asset would be growing way faster than the liability. But then you have the bear case, and it's a strong one. You've got economist and former Labor Secretary Robert Reich, who offers a really sharp critique. He flat out compares crypto to a Ponzi scheme. His view is that its value only goes up as long as new money keeps flowing in from new buyers, not because it has any real intrinsic use. And the list of risks from critics is pretty serious. First, there's the extreme volatility. I mean, Bill Gates himself has warned that Bitcoin is just too unstable for everyday people, let alone public funds. Then you have major banks like JP Morgan worrying that huge government buys could completely distort the market and manipulate prices. And of course, you've got the massive potential risks to taxpayers and the political reality that, as of now, the Bitcoin Act only has Republican backing. There's no bipartisan support yet. But here's the thing. The United States isn't making this decision in a vacuum. Not at all. This is actually part of a much bigger story. A whole new global money game is unfolding right before our eyes. So, while the US might be the biggest player thinking about this move, it is definitely not the first. Other countries are already experimenting. You've got Bhutan, which is using its clean hydroelectric power for state-backed mining. Then there's El Salvador, which just went all in and made it official legal tender. Brazil is looking to put about 5% of its reserves into BTC, and Russia is even exploring it as a way to get around sanctions. See, the strategies are all different, but the overall direction is pretty clear. Nations are taking Bitcoin very, very seriously. And all of this is having a real measurable impact. I mean, forget about individual retail investors for a second. We're talking about massive institutions. Right now, over 3% of all the Bitcoin that will ever exist is already off the market, locked up in corporate and national treasuries. Now, I know 3% might not sound like a huge number, but for an asset that's designed to be scarce, that is a massive shift that's already well underway. Which really brings us back to the final central question. Is this the dawn of a totally new era? A smart path to securing financial power and protecting against a really uncertain future? Or is it just a nation-sized gamble, putting public money on one of the most volatile assets in modern history? The debate is really just getting started. And honestly, the stakes could not be higher.